Welcome to the Invest in Value channel. My name is Victor, and in this video, I wanted to cover Coinbase. If you notice, Coinbase has been on a tear in 2023. They're up more than 160%. If you look at their stock price, just a phenomenal rise for this leader in cryptocurrency. Really interesting company. I wanted to take you through the analysis that I completed before I started investing in Coinbase in 2023. Share with you some of the details that I thought were interesting and worth considering as I invested in this company. I like to follow a consistent process as I invest in companies, and that process involves 4 key questions followed by a decision. First question is really important. Do I really want to own this company? Do I want to be a part of this industry? The second question is the company operated and performing well? Third, is debt under control? Is it less than 3 times EBITDA? Fourth, I want a discount on the stock. I want to make money on my investment in this particular stock. So am I getting a discount? Based on the answers to those questions, I decide whether I'm going to buy, hold, or sell this particular stock. Okay, so do I believe the story behind Coinbase, and do I believe in their future? Really important question to answer before I decide to buy into a company. And the short answer is yes. I believe Coinbase has a very important role in the future, and it's worth investing in. Let me give you details. So everything on the internet and in our digital world continues to evolve, transform, and become bigger, grander, more intuitive, more capable. And as we look at the third generation of the Web 3, there's going to be new advances, metaverses, artificial intelligence. It's pretty incredible where we're at here in 2023. And as I look at that, I'm in the technology industry. The payment systems that are going to have to support the new generation of websites and applications and things we do in metaverses and things we do really in the digital realm are going to have to, payment systems are going to have to evolve to really fit that new paradigm. And Coinbase is right there with the innovators that are creating the new payment formats, the new finance industry. And that's pretty interesting. Now, is it an exact science at this point? No, I think it's really still early. But one thing that I like seeing about Coinbase is that they are very well organized. It's a good company. They have a strong customer base. And I think their future is exciting. It's not completely determined. There isn't a clear line of sight on exactly how big they're going to be, exactly what products are going to be the biggest products, but they do have a pool of talented people and technologies that I believe are leading the industry. That said, I have a small position in Coinbase compared to, let's say, my position in Meta. That's a fairly large position. Meta has a very defined business that I really can get my head around. The Coinbase business isn't exactly mature, so it's still growing and so forth. So I have a good solid position, a starting position with Coinbase. It's been my number 1 performing stock. If you look at a percentage return over the last year, it's gone up more than 160%. Just an exciting stock. And let me give you additional details and analysis that I've completed on Coinbase. Looking at the Coinbase financials, this is the most current quarter that was closed for March 31st, 2023. They have a good amount of cash on their balance sheet. So well capitalized. If you compare their cash to their debt, it's they can pay off all their debts with the cash on the balance sheet. So very good to see that the company has plenty of cash to operate. They aren't going to have a cash crunch anytime soon and should be able to operate into the future. Taking a look at their revenue, the revenue has gone, if you look at 2019, the revenue was 523 million, and it more than doubled in a year up to 1.2 billion. It really went up in 2021, and then it came down in 2022. It follows where cryptocurrencies really went, which is we had a crypto winter in the 2022 timeframe. So you had fewer trades and you had the value of those trades really go down. So understandably, it's gone down. But what I would say is, if you look at 2020 and look at the 2-year run rate up to 2022, the business more than doubled. It went up about 250%. So that's good to see. I look at that, and since it's a young industry, very young company, I'm comfortable seeing that over the last 4 years, they've grown revenue quite a bit. Looking at the most recent quarter that was closed, one thing I like is that their profitability, or their path to profitability, keeps getting closer. If you look at their net loss, it was roughly $79 million. But the previous year, they lost 430 million. Losses are normal for a new growing company that is really looking to really establish the biggest market share that they can get and really grow top line revenues. So I like that their path to profitability is there, and I think they're probably going to hit profitability within a year. One thing about Coinbase that has always been interesting to me is that they generate free cash flow. They generated a lot of free cash flow a couple of years ago, and the most recent quarter, they generated over $400 million of free cash flow. From a young, growing company, it's really interesting to see a company be able to develop or drive that kind of free cash. So that's one of the things that I like about Coinbase, is that they have free cash flow in their operations. And as they get bigger, if they continue to grow that free cash flow, it's going to make the company very valuable. If you look at the most valuable companies, Microsoft, Chevron, Meta, Alphabet, Google, you look at their free cash flow, tremendous free cash flow generation. And that's what I'm seeing in Coinbase. Is they're a cash flow generation company. They're in a business, as they get bigger and they get big scale, I think their free cash flows are going to be very, very big as well. I like to value my investments based on the free cash flows that I expect they're going to produce, and discount those free cash flows to today's dollars. In the case of Coinbase, I took their Q1 free cash flow, multiplied that times 3 to establish the run rate for the current year. The reason I did that is, last year with the crypto winter, that data isn't useful to me today. We're out of that crypto winter. Bitcoin prices are doing really well. The stock market's doing really well. So we're in a different time zone, where I'd rather take the first quarter, take a conservative 3x that quarter to estimate the current year, and have that as my starting point, with free cash flow at $1.3 billion expected in the current year. I take that number, I take a high weighted average cost of capital. Even though their balance sheet is really strong, this is a new, young company in a new industry. So I'm going to go with a higher weighted average cost of capital. Based on that, I get a value of those cash flows of just about $24 billion. I add the cash that's on their balance sheet, but I take away the debts that are on their balance sheet. So it nets out that the company really has an equity value to me of $25.5 billion. Their current market cap is 19 billion. I divide that by the number of shares that are outstanding, and I get a value per share based on the free cash flows that they're going to be producing of $110 per share. They're currently trading at $89 a share, so it provides a 23% discount. That's after it's run up considerably. So at the current time, I'm not buying more shares, but it continues to have a lot of value in my eyes because it generates free cash. It's a young business, so they have a negative earnings per share. So in this valuation, I'm not going to use earnings per share because it drives a negative number. And I think in the future, this will be a positive number, and I can use the blended method that you've probably seen in my other videos. So Coinbase is up 169%. in the last year. Just a phenomenal rise, just a great rise. And, I started buying shares a few months ago. My position is up more than 50%. So that's great. This investment does take more risk than, let's say, buying into a well-established company. But there's also a greater reward, especially if Coinbase continues to really get bigger in revenue size and they continue to drive those free cash flows. And this industry in itself becomes a really mature. You're going to see this business be worth a lot more than what they're currently valued at. One of the things that's making me more and more comfortable in the cryptocurrency industry and digital payment industry is that the big brokerage firms and big hedge funds are really getting into this space. So if you look at Coinbase, it's owned by a number of well-recognized ETFs, that are sponsored by big brokerages. So I think as more institutional money enters this space, it's just going to keep getting bigger and more valuable. That's a very good signal for this space. So let me give you a quick review of Coinbase. First, the stock price has been on a tear. It's the number one performing stock in my portfolio based on a percentage. It's up 166% year to date. Over the last 30 days, it's up 75%. Just a great rise in Coinbase. I like their free cash flows. Their performance of driving free cash is excellent, and they're growing their revenues. The revenues will continue to rise in 2023. Free cash flows, I expect free cash to continue in 2023. Shorts, 21% of shares are being shorted of Coinbase. So if there's a short squeeze, it's going to really jump up. I think there already is a lot of pressure on those shorts. Example today is July 11th. The stock is up 10%. That's got to put a lot of pressure on these short sellers, and we'll see what they do. My outlook is this is the number one crypto exchange in the United States. So they're going to continue to be that exchange. And as this industry continues to mature, I think the value of Coinbase is going to continue to go up. Big brokerages are entering this segment, and Coinbase could be an acquisition target, especially if they really have this business well thought out. One of the big massive companies would acquire Coinbase. This will be the leader in this space. I think hands down, they have the best talent, they have the best people, and I really believe in the company. So let me scorecard Coinbase. First, do I want to own the company and be a part of this industry? It's an absolute yes. Really exciting company. And I owned, Google way back when it rose, at a great rate. I owned Tesla back in the day, rose really well. And it's really fun to get a company when it's a young company, it has a direction, and then watch it rise. The company is very well operated. I think it has the best talent in this space that's available. A very good operating company. Debt is under control. In fact, they can pay off all their debt with the cash on the balance sheet. They don't offer a big discount currently, and that is one of the deal breakers for me. I love the direction the company is going in. I like that my stock's really gone up in value, but there isn't really a substantial discount on the stock currently. Therefore, I'm just holding my shares in Coinbase, and I'm going to let them release their earnings for a quarter or two and see how that changes my valuation. And if a discount if I determine that the stock is at a discount, I'll buy more shares. So that's where I'm at today. I'm holding on Coinbase. So that's my video on Coinbase. I hope you found it interesting and enjoyed it. I'm glad that I've invested in Coinbase. I like following Coinbase as well as other cryptocurrency and new digital currency companies. I think it's an exciting space that has a very bright future. Please keep in mind, everything that I do is for entertainment purposes only. I like sharing my experience as an investor. In this case, I'm an investor in Coinbase, and I hope you found it interesting. Good luck investing in 2023.